What happens when an Army officer decides routine isn't enough, drops out of law school, and tosses open the doors of possibility with a daily show? Meet John Lee Dumas, aka JLD, the creator and voice behind Entrepreneurs on Fire, a legendary award-winning podcast that has interviewed thousands of entrepreneurs, including Tony Robbins, Tim Ferriss, and Seth Godin, with more than 4,000 episodes and still racks up over 1 million listens every single month. JLD is the same guy who held command in Iraq, then bounced through law school, finance, and real estate before having his aha moment at 32. A podcast every day. It started lean, him asking short, crisp questions, stepping aside, and letting guests carry the fire. He didn't stop at interviews. He wrote The Common Path to Uncommon Success, a modern 17-step roadmap to financial freedom and fulfillment. He also created fan-favorite goal-setting tools like the Freedom Journal and the Mastery Journal, each earning Amazon's choice and earning him a full-time entrepreneurial career. Today, JLD is building a media empire from the beachfront of Puerto Rico, sharing everything from guest interviews to income reports and daily inspiration with his Fire Nation community. This isn't yet another podcast intro. It's the ignition point, a conversation about discipline, curiosity, and what happens when you commit to lighting up others around you every day. And before we hop into the podcast, a quick word from our sponsor, Deep Wealth and the Deep Wealth Mastery Program. We have William, a graduate of Deep Wealth Mastery, and he says, I didn't have the time for Deep Wealth Mastery, but I made the time and I'm glad I did. What I learned goes far beyond any other executive program or coach I've ever experienced. Or how about Bruce? Bruce says, before Deep Wealth Mastery, the challenge I had with most business programs, coaches, or books was that they were one-dimensional. Through Deep Wealth Mastery, I'm part of a richer community of other successful business owners. The ideas shared forever changed the trajectory of the business, and best of all, the experience was fun. And we'll round things out with Stacy. Stacy said, I wish I had access to the Deep Wealth Mastery before my liquidity event, as it would have been extremely helpful. Deep Wealth Mastery exceeded my expectations in terms of content and quality. And you know what, my Deep Wealth Nation, why they're saying this is because Deep Wealth Mastery, it's the only system based on a 9-figure deal. That was my deal. And as you know, I said no to a 7-figure offer, and I created a system that we now call Deep Wealth Mastery that helped myself and my business partners welcome from a different buyer, a different offer, a 9-figure exit. So if you're interested in growing your profits, preparing for a future liquidity event, if that's 2 years away or 20 years away, and you want to optimize your post-exit life, Deep Wealth Mastery is for you. Please email success@deepwealth.com. Again, that's success, SUCCESS @deepwealth.com. We'll send you all the information about Deep Wealth Mastery, otherwise known as Scale for Ultimate Sale. That's where you want to be. You want to be with other successful business owners, entrepreneurs, and founders just like you who are looking to create market disruptions, and they want to lock in their financial freedom and have success and fulfillment. That's the 90-day Deep Wealth Mastery Program. It has your name on it. All you need to do is take the next step. Send an email to success@deepwealth.com. Deep Wealth Nation, welcome to another episode of the Deep Wealth Podcast. We have a very special guest in the House of Deep Wealth. He's a fellow entrepreneur, podcaster, author, visionary, and he's the one and only host of Entrepreneurs on Fire, which as of this recording is approaching 5,000 episodes. He's doing one a day. Imagine that. John's always been a visionary, and he recently caught my attention with one of his newest podcasts, MSTR Today, where he's talking all about this mythical thing called Bitcoin. And that's when I reached out to John and asked him, hey, John, can you come onto the Deep Wealth Podcast and share your experience and your vision of Bitcoin, where it's going, what you've been doing, and what we should know? And to his credit, he said yes. So John, welcome to the Deep Wealth Podcast. An absolute pleasure to have you with us. There's always a story behind the story. John, what's your story? What got you from where you were to where you are today?
Well, thanks for having me on the show. I'm excited to be here for a lot of reasons. And I'll say, listen, I'm just a boy from a small town in Maine. I grew up there for the first 18 years of my life, went to college on an Army scholarship. So I spent 4 years as an active duty officer in the U.S. Army, did a little 13-month tour of duty in Iraq as a tank commander, which meant I was in charge of 4 tanks and 16 men for my 13-month deployment to Iraq. After my time in the military, I tried a bunch of things. I went into corporate finance. I went to law school. I was in commercial real estate. just trying to find my footing to see if I could get something that tasted right for a career, for something I wanted to do for the rest of my life. And frankly, nothing was really answering that bell, so to speak. I mean, I did something for a couple years, for 1 year, for 13 months, and I was just cycling out of those different careers because they just weren't clicking for me. And back in 2012, I discovered podcasting as a consumer, said, you know what? I feel like there's an opportunity to create a pretty special podcast that is all based around interviewing entrepreneurs. And I didn't want to just do a show that other people were doing. I wanted to make it different. And I knew the biggest difference I could bring to the world was quantity. So the show Entrepreneurs on Fire was launched back in 2012. It was the first, and to this day, only daily podcast in the world interviewing entrepreneurs. That's my niche. I'm sticking to it. 4,786 episodes later, I'm still going strong, having a great time. As you mentioned, about 14 months ago now, I launched a show called MSTR Today, which is all based around Bitcoin, which is all based around Michael Saylor, which is all based around his company called MicroStrategy, now called Strategy. Because I just fell in love with Bitcoin many years ago. And then I fell in love with what Michael Saylor was doing with his company Strategy. And I'm just a huge believer in the space, in the industry. I've consumed thousands and thousands of hours of content around Bitcoin from people like Michael Saylor. I've put in hundreds and hundreds of hours of personal study. I've been doing a daily show that I call MSTR Today, which is all around the company Strategy and what they're doing on a day-to-day basis. So I just love that industry. And to me, it just really marries well with what I'm doing with Entrepreneurs on Fire. Entrepreneurs on Fire is about entrepreneurs who are successful, how we can learn from their strategies, their successes, their failures. But guess what? When you become an entrepreneur on fire, you probably have some disposable income, some actual money that you've made. Should you just keep that money in dirty fiat and cash and just watch it melt away as the government prints endless amounts of money and turns your dollars into a melting ice cube? Or should you invest it into what I consider is the best store of value that humanity has ever created? For 5,000 years, that was gold. Now it's digital gold. It's called Bitcoin. And there's a lot of reasons why Bitcoin, in my opinion, and many other opinions of who I consider brilliant financial engineers like Michael Saylor, it's an incredible opportunity. I've, again, put in thousands of hours of work consuming the content to learn about it, hundreds of hours applying it myself. I'm in it for the long run. It's an incredibly volatile asset compared to the dollar, by the way, because one Bitcoin will always be one Bitcoin, but it's an incredibly volatile asset when you compare it to dollars. It's gone from essentially zero to $112,000 since 2008. And it's, in my opinion, over the long run, only going one direction, up and to the right. Not in a straight line, in a very volatile measure and path, but that is the world that we live in. And I'm excited to talk about that. So whatever, Jeffrey, you want to unpack from that and go into next, I'm happy to discuss.
Terrific. And John, firstly, thank you for your service. Back in the day, you did what you did so we can do what we do as entrepreneurs. Always very grateful for that. And a heartfelt thank you for doing that. And Default Nation, when you go to the show notes, we'll have everything that John mentioned there. And by the way, get his book, The Common Path to Uncommon Success, a roadmap to financial freedom and fulfillment. Those F words, freedom, fulfillment, all about that at Default as well. All that will be in there for you. So John, let's now talk about the foundations of Bitcoin. And Default Nation, if you already know Bitcoin and you're like, Jeffrey, John, I'm already investing in it. I've been doing it for years. Just hang on. We'll get there. But we've got to cover the basics first. So what's interesting, John, almost every single guest, towards the end, when I ask the wrap-up question, and no spoiler alerts here, we'll get there, but one of the things that they mentioned is, I wish I would have bought Bitcoin. But when I hear that, the reality is people say it, but most people, I find, are afraid of it. It doesn't have a great reputation out there if you don't know about it. So fact, fiction, what is Bitcoin? What should we know? Walking away from here, very high level, why is it important that as entrepreneurs, we know about Bitcoin today as opposed to 5 years from now, 10 years from now?
I mean, listen, I'm sure you have your disclaimers, but of course, nothing in this video that we're doing is financial advice. I'm not a financial advisor. I'm just a guy that's put in thousands of hours of work to learn about a topic and hundreds of hours of work actually applying that knowledge into the topic itself, which in this case is Bitcoin. I'm such a believer in it. For one thing, Like, what is a store of value? A store of value is something that holds value for you. So can you really consider a dollar, any currency in the world, a store of value? Of course not, because every dollar, every fiat, every currency that's ever been created goes to zero over time. And the US dollar is the strongest and the best in the world right now. And it's a great way to do day-to-day transactions. And it's a great way to do certain things in this world. But as a store of value, it is absolutely horrendous because it is just a melting ice cube due to inflation and the Fed continuing to just print endless amounts of money. And so when an asset is not scarce, it becomes less and less valuable over time. That's where Bitcoin comes in. Bitcoin is incredibly scarce. It is 21 million Bitcoin for all time. 99% of Bitcoin will be mined by 2035. That's just a fact. So Bitcoin is just becoming a harder and harder asset as every day goes by. And with a cap of 21 million in the form of something like a Bitcoin, it is that scarce asset that can store your value, as we were talking about earlier, storing your value. And in some cases, especially when you're comparing it to something like a fiat currency like the dollar, grow your value over time. One of my favorite graphical memes and just different social media graphic shares that I've seen over time is, what did one Bitcoin buy you in 2016? It could buy you a hamburger. What could one Bitcoin buy you in 2020? It could buy you a laptop. What can one Bitcoin buy you in 2025? Well, a Lamborghini. Or even another way that people can really visualize this is essentially it took, and I'm making these numbers up, but it's something pretty close to like hundreds of Bitcoins to buy your average house in 2016. Then it took 50 Bitcoin in 2020 to buy one house. And now it takes 3 Bitcoin to buy your average cost house in the United States. So as you can see, over time, the dollar cost of everything just goes up, but the cost in Bitcoin and everything has been going down. Now, is that day to day, week to week, month to month? Of course not. Bitcoin's a very volatile asset. It's had many bull markets. It's had many cycles. Every 4 years, there's been a Bitcoin crash of sorts where it's gone down 50, 60, 70, 80%. And that's brutal and that's painful. And nobody wants to be a part of that, but it's just a reality of the asset. It's a reality of volatility. You never feel like that happens with dollars because you don't see dollars crash 70% over the course of a couple of weeks or a month, but you can actually see Bitcoin crash compared to dollars in that same time frame. Now, of course, that was usually preceded by Bitcoin going up thousands and thousands of percent to then have a correction back to the downside. But it's this asset that a lot of people have a hard time wrapping their mind around because it's digital. It's not something you can reach out and touch. It's not a bar of gold that you can hold. A lot of people say, well, I love gold because you can touch it. When's the last time you've touched gold? Literally, I'm not talking about your earrings. I'm talking about a bar of gold or a coin that's actually made out of gold. That's just not something that people do either. So it's really a bad comparison. So again, I just love the idea of being able to store my value in something that is incredibly finite, that is an incredibly scarce asset, that has an absolute hard cap of the amount that will ever exist. And that for Bitcoin is 21 million. And think of anything in this world that's valuable. Like, what's one reason why Rolex watches are valuable? It's because they limit the supply that they make of actual Rolex watches. When you go and buy a Rolex, you're on a wait list because it's not just readily available. So scarcity brings that in. And that just is shown time and time again when it comes to collectibles like art, baseball cards, fill in the blank. It's scarcity that will always win the game at the end of the day. So Jeffrey, a lot of ways we can go from here. Happy to hear your thoughts and go from there.
So one thing, John, that you've shared with us, and of course, Deep Wealth Nation, as John said, this is not financial advice. It's just the two of us sharing our thoughts, our opinions, our experiences. And so, John, you've established, okay, over time, and you're calling a currency a fiat. So Deep Wealth Nation, when you hear the word fiat, it could be the US dollar, it could be the euro, it could be the pound.
The Turkish lira, the Argentinian peso, which are, by the way, all going down.
So you're saying all the fiats over time have gone down effectively to zero, the US dollar being the strongest of them. Even as strong as it is with inflation, it's also over time really not doing all that great. And in comes Bitcoin, which you refer to as energy, and also something that there's only going to be 21 million of these Bitcoins. And so for starters, and for someone in Deep Wealth Nation who's saying, okay, well, John, you said when Bitcoin first came on the scene, you might be able to buy a hamburger with a Bitcoin, and now you can buy a Lamborghini. So quite a difference. What's driving the value? Why is Bitcoin becoming more valuable over time? And if we were to fast forward a year from now, 10 years from now, I mean, I'm hearing things like a Bitcoin may be worth $1 million and then eventually $10 million and beyond. So what's behind that?
It's inevitable. $1 million Bitcoin sounds crazy to people. That's only a 10x from here. That's not that insane. A 10x from where we are right now, that's not crazy at all. In fact, just not too long ago, Bitcoin was at 16,000. Not too long ago, it 10x'd from 16,000, close to it, to where it's at now, over $100,000. So to think that it might be able to 10x again in 5 or 10 years is, to me, absolutely not if, but when. And when does it get to 10 million? Not if, but when. And it all comes back down to the main point of your question, which is supply and demand. Why is beachfront property more expensive? Because there's a lot more demand for people that want to buy beachfront property, and there's a lot smaller supply than there is of a town in the Midwest like Kansas. I used to live in Kansas. All we had was flat lands and just the ability to build houses. It was great. Kansas is a great place, but endless amounts of land out there. As far as prime beachfront property, well, that's not endless. There's only a certain amount of beachfront property that can and ever will be built. And of course, that supply can go up a little bit over time because places like Dubai are literally creating more land to build more beachfront property, which to me just goes back to why Bitcoin is so valuable, because you can't do that with Bitcoin. Gold's unbelievably scarce, and gold's having a record year. And I commend everybody that's invested in gold. I'm one of those people. We are benefiting from the result of holding a scarce asset, which is gold. Now, gold still has a stock to flow ratio of over 2%. What is essentially happening is, of whatever gold's total supply is, typically between 2 to 2.5% of gold's total supply is being mined out of the ground every year. Now, that's not a lot, but that is something. So over time, you are continuing to add to the gold supply, and you always will. Maybe someday in the future, we'll be mining gold from asteroids or from Mars or from somewhere else. And by the way, that's fine. It's going to be expensive to do, and gold will still be very valuable. But that's just an example of supply and demand. Gold is very valuable because it's very difficult to attain. Oceanfront property is valuable because it's very difficult to attain, and there's a very finite supply of that. Bitcoin is the same way. The demand is increasing exponentially. Why? Because people like you and me are now wanting to buy Bitcoin, where you and I were not buying Bitcoin 10 years ago. I started buying Bitcoin 5 years ago. You did not, but you're going to start potentially looking at buying Bitcoin now going forward. So you'll be taking some of that supply. There's companies like Michael Saylor's company Strategy, the one that I think is going to be one of the most, if not the most valuable company in the world in a relatively short time frame. And I'm talking 5 to 10 years. It literally could happen. And what do? All they do essentially is raise money, is leverage debt, and buy Bitcoin. And they're called a Bitcoin Treasury Company, BTC, Bitcoin Treasury Company. And there's tons of those companies, Jeffrey, that are being created every single day. There's over 180 right now at the time that you and I are talking. Soon there will be over 200. Soon there will be over 2,000. And so now there's nation states that are coming in and buying Bitcoin. Bhutan is using natural resources to mine Bitcoin. El Salvador is buying Bitcoin every single day, literally. But there's going to be a pretty significant announcement on what the US is planning on doing when it comes to their strategic Bitcoin and crypto reserve. So the demand is going through the roof. The supply is staying the same at 21 million. So there's only one result. Price goes up. Not every day, not every week, not every month. There will be massive pullbacks, but over time, I believe it's going to be up and to the right.
Okay, so with that said, Deep Wealth Nation, why we're talking about this now is at one point here at Deep Wealth, You may decide to keep your business forever, or you may decide to sell it proverbially tomorrow. And either one is great. If you do end up selling it, or you get it to the point where you have some nice profits, you want to look into other chapters in your life and perhaps travel the world or do other kinds of things, what are you going to do with your capital? What does that look like for you? This may be one viable option for you. So with that in mind, John, I'm going to mention two names for you. One you've already mentioned, but let's very high level go back to the beginning for both of them, and perhaps for Deep Wealth Nation in a paragraph or two talk about why they're important and who they really are. So the first one is Satoshi Nakamoto. And then the other name that you've mentioned is Michael Saylor. So what's the significance, firstly, of Satoshi, and then on to Michael?
So in a nutshell, Satoshi Nakamoto is the person or persons. Nobody knows if it's a male, a female, a group of men, a group of women, a group of men and women. Nobody knows. But essentially, it's some group of individuals or an individual who created the protocol that is Bitcoin. They created the code that comprises Bitcoin. And one way that a lot of people look at Satoshi Nakamoto is he or she or they created it and then they walked away. They said, you know what, this is best if it's just being given to the world, open sourced. There's no boss, there's no ruler, there's no company head. It's just going to automatically do its thing as it's coded to do via math principles. And that's what it's going to be for all time. So Satoshi Nakamoto is just a name designation for whoever the creator or creators are of Bitcoin, period, end of story. Michael Saylor, he's an individual that launched a company called MicroStrategy in 1989. The company went public in the late 90s and absolutely exploded during the dot-com boom, and then completely collapsed during the dot-com bust. And then essentially from the early 2000s until 2020, he was just a company that was struggling, and they were having some good years and some not so good years. They were profitable. They were not so profitable. They were just like any company going through ups and downs and cycles, but they survived, which is impressive. For 20 years, from the early 2000s until 2020, his company survived. But Michael Saylor, especially when COVID hit, realized that he was either going to end up losing pretty quickly to companies like Microsoft and Google, or he was going to have to figure out something different to do. So he went into basically a little study period in his life. And when he came out of that, he said, essentially, we have $500 million in the bank, which sounds like a lot to your average person, but for a company of the size of MicroStrategy, it wasn't a ton of money. It was a good amount of money. It was a good start, but it wasn't a ton of money when it comes to having to pay salaries and bankroll and funding and all these different things that a company like a strategy of that size had to do. So he realized they were a ticking time bomb. They were what he likes to actually call it, a zombie company, where they were just waiting to either be acquired or to just fade off into oblivion. That's when he decided in 2020 that he was going to take a chance, because it was a chance, because nobody knew what the future was going to hold. But he became a diehard Bitcoin believer, a diehard Bitcoin maximalist, because he did the work. He read the Bitcoin standard. He read the white paper. He did hundreds and then thousands of hours of individual work to learn what Bitcoin was. And this guy is an aeronautical space engineer, MIT graduate. He loves systems. He loves math. He's who I consider, by the way, the financial engineering genius of our lifetime. That's my opinion. I could be wrong. I doubt it, but I could be wrong. And he came out of that saying, Bitcoin is the future. And what he did was he let all shareholders know, we're going to take $500 million and we're going to buy Bitcoin. Anybody that wants to sell, I'll buy your shares right now from you. You can get out now before we do this. And anybody who wants to stay, you'll be on this ride for us. So who left, who stayed. They ended up buying what I think ended up being somewhere between $250 to $275 million worth of Bitcoin. And that was their first tranche of owning Bitcoin. And by the way, when they bought it was like 11,000. Bitcoin pretty quickly traded down to $7,000 or $6,000. It was immediately like, oh my God, Michael Saylor just tanked his company. It's the end of the world. It was a horrible decision. Now, of course, it came back and it ended up going up to 70,000. and then back down to 16,000. And now it's up to 112,000. And who knows what it's going to be a year from now or 5 years from now. But if you are like me and Michael Saylor, you believe over time, in the long term, it is absolutely going to be higher. His prediction, which I believe, because I believe what Michael Saylor says, and I believe in his math and in what he stands for, is that Bitcoin is going to average about a 30% CAGR every year for the next 21 years. That means a 30% compound annual rate of growth every year for the next 21 years, 30%. Not 1,000%, not 500%, 30%. That's what he believes, and I believe that's very possible as well. That's not insane. It's incredible, but it's not insane numbers. Bitcoin's had insane numbers for the past 15 years, absolutely insane. But of course, there is a law of diminishing returns when you become now what Bitcoin is, which is a $2 trillion asset. So Michael Saylor, for the past 5 years, since 2020, has been figuring out every way he can to intelligently use leverage to buy Bitcoin, whether that be through convertible bonds, convertible notes. He now has multiple preferred equities, preferred stocks, which are called Strife, Strike, Stretch, and Stride. He does what's called ATMing of the common share, which means he sells shares into the market and uses those proceeds to buy Bitcoin. And he's essentially doing that every single week. So for years now, Michael Saylor has been buying Bitcoin as often as he can. And now, and for the past couple of years, he's been pretty much on a weekly cadence where he's buying Bitcoin as much as he can because he knows what's coming, because he believes what is the future, which is Bitcoin. So his mindset is, why would I not be acquiring as much of the future as possible right now? That's what he's doing. That's what Strategy's doing. They now own 639,000 Bitcoin, which is over 3% of the total supply of Bitcoin that there ever will be. And he's going to keep buying Bitcoin forever, intelligently, using intelligent leverage, with always keeping his MSTR shareholders as the focus of, this is who I'm working for. This is who I'm trying to benefit the most.
What's interesting about Michael, he said a few interesting things. He said, firstly, we've all been lied to about inflation. If you actually look to what real inflation is, it's not the 2 or 3% or even 5% that we're told that it might be. It's actually higher when you compare it to what people actually buy and what they're using. And the basket of goods that we're being told this is inflation really isn't relevant to us. And that led him to what you're talking about, his conclusion that, hey, at this rate, I'm going to lose my company. I'm going to lose my employees. He was the first company to go all in on Bitcoin. And his treasury went from US dollar being the fiat to, okay, our treasury is now 100% Bitcoin. And that's the significance of Michael Saylor and Strategy. So far, so good?
So far, so good.
And then what Saylor has done, and this is what you talk about all day long on your MSTR today. And again, Deep Wealth Nation, go to the show notes. You can subscribe to that. It seems like he's on a mission to bring the world into Bitcoin. So if someone doesn't have the risk tolerance to buy Bitcoin directly, he's now creating, and he said, hey, AI is helping me do this, but I'm creating these kinds of vehicles that have never been done before that are going to take the trillions and trillions of dollars from the investment system, from the financial system, and begin to onboard them into Bitcoin. So he wants to have the world come on to Bitcoin. So let me ask you this. From someone in Deep Wealth Nation, they're hearing us talk. They're saying, okay, well, what exactly is Bitcoin? Because when Michael Saylor talks, he says it's not a cryptocurrency. And he talks about the blockchain. So what really is Bitcoin? How do we understand exactly what it is?
I mean, the easiest way to understand Bitcoin, because most people do understand gold. Gold is something that you mine from the ground. It's a very scarce asset. And because it's scarce and because other people have attributed value to it, it is valuable. Bitcoin is digital gold. You mine it online. You mine it via computers, crunching code essentially. And it's mathematically finite. It is scarce. There's only going to be 21 million. So Bitcoin essentially is a commodity. It is a store of value. And if you believe what Michael Saylor and myself believe, it is by far the best and only true form of a store of value, of a store of wealth that exists in our time. Essentially, in 2 words, it's perfect money.
It's perfect money, as I understand it, because whoever owns it. A government can't take it away from you. And we'll talk about this momentarily. Your protection, it's in your head in terms of how you're safeguarding this, of who's going to get access to it. You can send it anywhere in the world nearly instantaneously. And compared to your example, hey, if I wanted to send $1 billion of gold, that's going to be complicated. It's heavy. It's risky. I've got to figure out how I'm going to send it. It's going to take some time. Whereas Bitcoin is getting faster by the day. It's really in milliseconds, minutes right now that I can send that all day long, every day. And another example, that's a great example, Deep Wealth Nation. Imagine, if you will, go back to the 1800s and you now own 3% of Miami Beach or 3% of New York City, and you fast forward to today. What would that be worth? But for Bitcoin, it goes beyond that, John, and you can tell me if you agree or disagree, because with Bitcoin, unlike property, you don't have property taxes. You don't have tenants leaving in the middle of the night. You don't have storms coming in, destroying the property, and you have to put all this capital to fix it. So when you say it's the perfect form, it's because we own it. We can travel wherever we want with it. We can send it whenever, wherever, that it's really financial freedom. How are we doing with that in terms of Bitcoin in and of itself, of why it's such a perfect, if I can use the word, currency?
Yes, for all those reasons, you're exactly right. And at the end of the day, there's a lot of ways that you can own Bitcoin. The truest form, if you are like a true Bitcoin maximalist, is what's called cold storage, where you're actually going onto an exchange like a Coinbase or a Kraken, and you're buying Bitcoin. But then you're taking that Bitcoin from the exchange and you're transferring it to a cold wallet that you solely own. And that cold wallet, and for people that have never done this before, it may be hard to visualize, but there are tools out there like Ledger and some others that allow you to have and own your own cold wallet, which essentially means that you have a 24-word seed phrase. And these seed phrases, again, are 24 random words that only you have access to. If you memorize those words, then you don't even have to have any written proof of those words. And only the person that has those 24 seed words can ever move that Bitcoin. So if anybody ever essentially just came, and let's just be brutal for a second, but if they came and killed somebody that owned the Bitcoin, that person could not access that Bitcoin. It could not be moved. It could not be transferred. And of course, if it can't be transferred, it's worth nothing, because if you can't transfer it to something for an exchange of value, it's worth nothing. So it really gives you this opportunity to hold your net worth literally in your head. So anytime you could access a computer anywhere in the world, you would then be able to access that Bitcoin and make moves on it as you wanted to. Now, a lot of people don't want that pressure. They don't want to necessarily have to go through that, because there is some technical know-how, some technical knowledge, and some risk in that manner as well. What if you lose your seed phrase? Which, by the way, it's estimated over 5 million Bitcoin have been lost in ways like that. So is there 21 million Bitcoin? No, there's actually closer to 16 million Bitcoin. And that makes the Bitcoin that are still active, that are still owned, even more valuable, because there's less that exist in this world. So Michael Saylor's 3% actually probably 5 or 6% of the actual supply of Bitcoin that's accessible. But you can go ahead and do things like buy IBIT, which is IBIT. It's a ETF that's run by BlackRock that you can sell the ETF at any time. And it's BlackRock that's doing the buying and the selling of the Bitcoin for you. So you're just buying the ETF and you're able to just stay very liquid and a much more manageable. It can be in your Fidelity account or whatever your brokerage is. You can just buy it. And what that's going to do is that ETF is going to exactly mimic the returns of Bitcoin. If Bitcoin goes up 5% or down 4% any given day, that ETF will completely mimic those returns. So you can have access to the returns of Bitcoin, but a lot of purists, and I understand why they feel this way, feel like that's not really owning your Bitcoin, because they'll use the phrase, not your keys, not your coin, which technically is true. So you've got to decide, what's the trade-off? Do I want to go down the rabbit hole and really learn this stuff and learn how to get a ledger or get a cold storage wallet, buy Bitcoin on an exchange, transfer it there, store my keys, do this, do that? Or do I just want to log into my brokerage account, go to buy an ETF, and 10 seconds later own what's equivalent to a Bitcoin return? It's more of like you're going to be mimicking those returns of whatever Bitcoin has. So there's multiple ways to do it. You can do what I like to do, which is own MSTR, because I know that Michael Saylor is creating an instrument that is amplified Bitcoin. Means that if Bitcoin over the course of a couple months goes up 5%, MSTR is going up 10 to 15%. And if Bitcoin goes down 10%, MSTR is going down 20 to 25%. It's an amplified version of Bitcoin. And we won't get into reasons why because it gets too technical. You really need to start listening to my show or just doing more of a deep dive. Or, by the way, and this is something I shared with you earlier, this book just came out, which I have no connection with this individual, but it's a fantastic book. It's called The Treasury of Michael Saylor, Anil Patel. And it's a fantastic book. It just gets into what Bitcoin is, why it's so powerful, why it's a beautiful instrument, why it's the best store of value in the world, why it's perfect money, and then also why strategy is what it is, why MSTR has the type of returns that it has, which, by the way, in the past 5 years is over 3,000% of a return, which is insane. Bitcoin's around 800 or 900%. MSTR is over 3,000%. So you can just see the amplification of that. But again, you got to remember, it goes the other way too. So if there's a Bitcoin bear market that's coming up, MSTR is going to perform even worse than Bitcoin performs, no matter how bad that is. So a lot of great resources out there. I love this topic. I love learning more about this every day, which is why I'm out here on this terrace reading this book today, because I love it.
Okay, so John, let's take a quick step back for Deep Wealth Nation. So you've shared some terrific insights. For the purists out there who want direct access, direct control over Bitcoin, you're saying that we can go on to an exchange and we can buy the Bitcoin directly. And then we have some choices. We can put into cold storage that we control. I know there's also services out there and it comes with some risk and some cost where someone else is going to hold it for me. And of course, the danger there is at a reputable company. What happens if they go bankrupt? What happens if there's some kind of cyber threat and it takes them down or it gets stolen? All those kinds of things come into play. Or I can own it myself, but now I have the responsibility of, okay, what are those 24 magic words? And if something happens to me, heaven forbid, how is my family going to get access to that? So it takes some time. It takes some preparation. I'm hearing you say it's some technical know-how. Before we go to MSTR, if someone wants to go down that path, what would be some resources that you can recommend?
Yeah, I would go check out Coinbase. They have a great knowledge tutorial where you can just watch videos on all these topics. They walk you through every step of the process. And if you have a big enough account, they'll even jump on a call with you and guide you through.
Okay. So I go to someone like Coinbase, they'll walk me through it, of how I can set that up. And I take it that's for my own storage. And then you're saying, hey, if you don't want that, if you want to have something that you can just with your existing broker, log in, see what's there. You can go right after this episode. You can go and get some. You have some of the ETFs like IBIT, and there's others out there as well. But there you can just buy it, and you don't own the Bitcoin itself, but the company owns it. And now as Bitcoin goes up, it goes down. You're now a part of that, and it's relatively easy to buy, relatively easy to sell, but it's not owning the Bitcoin directly. So we've talked about some of the downsides of the Bitcoin directly. If you lose your passphrase, if you haven't documented it securely and something happens to you, the family can lose out. For the ETFs that I'm buying like IBIT and others out there before we get to MSTR, what are some of the downsides of having IBIT or other ETFs?
I don't really personally believe there's that many downsides. It's just the one obvious downside that a lot of the purists point to, which is the government could technically freeze BlackRock's assets or freeze Fidelity or freeze specifically your brokerage. For instance, if somehow you get accused of something by the IRS, whether that be tax evasion or something or whatever it might be, rightfully or wrongfully, your assets can be frozen. If they're on a brokerage, a Fidelity, a Charles Schwab, fill in the blank, they can freeze your assets. And if you own FBTC, which is Fidelity's Bitcoin ETF, that would be frozen. Now, nobody can freeze your Bitcoin if you have it on cold storage and you have the passwords in your head. Nobody can freeze that. They can do a lot of things. They can throw you in jail. They can do this. They can do that. But technically, they can't freeze your assets. And you could do some interesting things. An example that is used quite often, and again, there's no perfect solution to anything ever. What if a lot of the Jewish individuals that were prosecuted in Germany back in World War II, what if they had been able to just leave the country without trying to take their gold or their jewelry or their artwork, which got confiscated. Like all of that was confiscated. Well, if they could have just put all their wealth into Bitcoin back then, which of course was impossible because it didn't exist, but they would have been able to just, if they could find a way out, they would have been able to take essentially all of their net worth with them, which would have been pretty much a game changer in that scenario. So that's the argument. There's pros and cons to whatever you do around it. You just have to figure out what are you most comfortable with. And I would just say that, frankly, if you're not expecting to get in any trouble with the law going forward, which of course most of us have that belief because we're law-abiding citizens, then you're going to do fantastic, in my opinion, owning something like FBTC, and you're going to get the exact returns of Bitcoin, but without the counterparty risk of you storing it yourself. So you need to think what makes the most sense for you.
So what's your risk tolerance? What's your technical skills? And what makes you, your family comfortable? Then you can make some decisions. So you have Bitcoin, then you have the ETFs, and then you have companies like MSTR, and there's going to be many others coming through. You already said there's close to 200, and there's going to be more than that. But MSTR specifically, so this is something that you've latched onto. In fact, that's what your whole show is on, MSTR and the Treasury Titans. And you're focusing on MSTR and companies like MSTR, like Strategy, who are coming on board now and saying, okay, we've taken our company and our treasury is now 100% Bitcoin and we own all these Bitcoins. Now, from that perspective, we're buying into Michael Saylor, the man himself, his vision, and no pun intended, his strategy on strategy, maybe pun intended. And so there potentially could be a downside to that. So for a naysayer out there, John, is saying, hey, yeah, Michael Saylor, he's brilliant. He's done really well for himself, but it's in his vested interest to get people bought into Bitcoin because it helps him, it helps the company, it props up his wealth. And perhaps this is all just one big show at the end of the day. What would you say to those people?
I'd say those are absolutely concerns. Those are real concerns that is a reality. At the end of the day, you have to say, who am I going to trust? Am I going to trust nobody? And that's fine. Am I only going to trust myself? Well, then maybe you just want to do cold storage Bitcoin and just hold that yourself and just be happy with the Bitcoin returns, which will likely be fantastic. And I do that with a good portion of my net worth. But I also have other portions of my net worth that I say, you know what? I really believe in Michael Saylor. I really trust Michael Saylor. That's me personally. Am I putting 100% of my net worth with him? Absolutely not. 50%? No. 20%? No. But am I putting a significant amount of money with Michael Saylor and MSTR? Am I investing heavily in his company? Yes, because I truly believe what he's building and I truly trust him. If you can't get there, then that's an investment you should not make. If you don't trust that Elon Musk is guiding Tesla in the right direction, don't invest in Tesla. If you don't think that Mark Zuckerberg is guiding Facebook in the right direction, don't invest in Meta. If you don't trust Mark Zuckerberg, don't invest in his company. So this all comes down to you making a decision for what you think is best for you, for your financial future. And for me, I've done the work. I've put in the efforts. I'm a huge believer in Michael Saylor. He is the financial engineering genius of our lifetime. He is wealthy beyond measure. To me, he is elevated above personal wealth and personal gain because he has way more money than he'll ever want or be able to spend. He just has proven to me that he's just looking to build the biggest and best company in the world. That's his passion. That's what he's doing. And I think he's going to succeed.
When we look at Bitcoin and companies like Strategy, and a lot of people compare that to what I call the dot bomb era, where anything internet was just up and to the right, as you said earlier, in terms of their charts and their value, and it's going there. And now seemingly you have these companies that are 100% Bitcoin-backed treasury. People are saying, well, but that's all there is. And the value that's being assigned to them, it doesn't make sense. They're not making a product like Apple or doing services like a Google or some of the others in there. How long could it really last? Saylor said, I was first very cynical of Bitcoin. Then when I got to know it, I spent the 200 hours getting to know Bitcoin, got into it, and it was like, wow, maybe I should just be buying some more before my neighbor buys it. So you go through those cycles. But to people that are saying, well, it's not sustainable that a company like Strategy could be the most valuable company in the world, more valuable as we record this today than NVIDIA, Apple, Google, and others simply because it owns Bitcoin. What would you say to that narrative?
I would say because Bitcoin's going to become by far the most valuable asset in the world. And if you are owning a massive amount of the most valuable asset in the world, you're going to have a valuation of your company to be astronomical. That's just a fact and a reality. And until companies like NVIDIA and others decide that they're going to hold some of their treasury in an asset like Bitcoin, we'll see what happens with them. They're always going to be at counterparty risk. China just came out and said, we're no longer going to be buying NVIDIA chips. Maybe another company comes out and has a better chip than NVIDIA at some point. Maybe that doesn't happen. NVIDIA is an amazing company. They might do amazing things. I own NVIDIA. I'm wishing them the best. I think AI is going to be incredible. And I think you can get the theme here that I am betting on a good number of horses because I think a lot of these horses can win. I think all these horses can win. I definitely think some of them can lose. One thing that I have the highest conviction in is Bitcoin, because to me, in my opinion, there is no counterparty risk with Bitcoin. It is just a finite store of value that has now got to the point of no return. End of story.
And John is talking about that, and we talk about AI, and we haven't talked about this yet. What's interesting, there's a narrative out there that says, hey, when AI really becomes everywhere, AI and Bitcoin are a match made in heaven. Because right now, for a bot to do a transaction on a credit card, you got the processing fees, 2% to 5%. It takes time, and there's a lot of friction. With Bitcoin, it's virtually frictionless, and the costs are really irrelevant compared to what we have today. So Bitcoin can really power AI through the internet in terms of whatever future services are coming down the line, yet another reason of why Bitcoin is going to be leading the way. But let me ask you this before we start going into wrap-up mode and a few more questions with that. You're never a prophet in your hometown. My kids, they're now young adults, and they have a clean slate. And I'm encouraging them to invest. And I tell them every day, if I knew what I knew at your age, it would be a whole different story. Maybe I wouldn't have needed my 9-figure exit deal. And one of the questions that they say is, hey, that's great, but why shouldn't I just invest in the S&P 500? I can get an ETF. It does great. It's the proven thing. Yeah, you're saying Bitcoin, but look how volatile it is, and it's up and it's down, and it's just so new. What would you say to that narrative?
I would say, listen, the S&P 500 has proven to be a wonderful investment for a long time. It's likely going to prove to be a wonderful investment for a long time going forward. But essentially, the S&P 500 is like 7 to 10 amazing companies and 490 dead companies. It's just a fact. Almost all of the returns in the S&P 500 come from the Magnificent Seven plus a couple more. That's it. So in my opinion, if I was to be going back in time, I would much prefer just owning my own basket of the Magnificent Seven. If I was going to invest in this S&P 500, why not just invest in NVIDIA, Google, Amazon, Facebook, blah, 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 all the way down? That to me is much more appealing. And if I was young and I did the research and I know what I know about Bitcoin, I would say, why not also put some of my net worth, a percentage, not a massive percentage, but a percentage, and something that's probably going to be going up forever, which is Bitcoin. That's, to me, an absolute no-brainer.
So we've talked about a few different kinds of off-ramps here that someone can do. And so we said, okay, you can buy Bitcoin directly. You can go buy a Bitcoin ETF. And now we've been talking a lot about strategy and MSTR. And MSTR, we have the stretch, the stride, the strike, and other ones. So low-hanging fruit here. And again, this is not financial advice, just you and I talking. Someone who's new to this, but saying, yes, I'm going to take the orange pill. Forget the blue pill. Forget the red pill. I'm taking the orange pill, otherwise known as Bitcoin. I'm going to go into Bitcoin, and I'm going to do something in terms of an investment. Where would they start if they had, let's just use 100 basis points. The 100 basis points, it could be $100. It could be $1 million. It could be everything else in between. Of that 100 basis points, where would you be dividing that, John, in terms of MSTR or STRC, STRK, STRD? What would that look like for you, knowing what you know?
If I had $100 that I wanted to invest today, and this is me, John Lee Dumas, in my personal situation, and I'm like, I want to invest this $100. I'm putting $40 into MSTR. I'm putting $40 into Bitcoin. And then I'm putting $20 into STRD, which is strategies, high yield. It's almost a 13% yield product. And then I'm probably every quarter when Stride's paying out its dividend, I'm probably sweeping that into both Bitcoin and MSTR, those profits.
Deep Wealth Nation, there's how John would spend his $100 or 100 basis points, whatever that would be. There's the ratios for you that you can think about for yourself and do what you feel is best. That's what John feels would be best for him, and some great insights there. So John, my goodness, so many questions to ask. We're bumping up against some time. It's a tradition here on the Deep Wealth Podcast. I have the privilege and the honor for every guest. I ask the same question, and it's a fun question. Let me set this up for you. John, when you think of the movie Back to the Future, you have that magical DeLorean car that will take you to any point in time. So this is the fun part. John, it's tomorrow morning. You look outside your window. Not only is the DeLorean car curbside, the door's open, is waiting for you to hop on in, which you do. You're now going to go to any point in your life. John, as a young child, a teenager, whatever point in time it would be, what would you tell your younger self in terms of life lessons or life wisdom? Or, hey, John, do this, but don't do that. What would that sound like?
I would go back to probably myself at 22 years old when I was just starting my career and making money. And I would just say, listen, have a long-term investing mindset, dollar cost average every week into investments that you believe in, and never touch them. It's the two best performing investors are ones that forgot their password, so had no access to their account, and those who died.
A lot to be said. Death and forgetting passwords go to high returns.
We are just programmed as humans to make bad decisions. And when you take away the ability to make bad decisions, then you're left with pretty great results.
Yeah, the human condition, a lot to be said for that. And John, for someone who wants to learn more about you, what you're doing, where would be the best place online for them to go?
Yeah, head over to eofire.com. That's my headquarters. That's where all the magic happens. I have a great podcast called Entrepreneurs on Fire, where I interview entrepreneurs 7 days a week. And then I have my show, MSTR and the Treasury Titans, which you can just look up on YouTube just by typing MSTR or my name, John Lee Dumas. It's a great show. And
Deep Wealth Nation doesn't get any easier. It's all in the show notes. It's a point and click. Well, John, it's official. It's a wrap. Congratulations. And as we love to say here at Deep Wealth, may you continue to thrive and prosper while you remain healthy and safe. Thank you so much.
Thanks, brother.
So there you have it, Deep Wealth Nation. What did you think? So with all that said, and as we wrap it up, I have another question for you. Actually, it's more of a personal favor. Did you find this episode helpful? Have you found other episodes of the Deep Wealth Podcast empowering and a game changer for your journey? And if you said yes, and I really hope you did, I have a small but really meaningful way that you can actually help us out and keep these episodes coming to you. Are you ready for it? The dramatic pause. I'll just wait a moment. Drum roll, please. Subscribe. Please subscribe to the Deep Wealth Podcast on your favorite podcast channel. When you subscribe to the Deep Wealth Podcast, you're saving yourself time. Every episode automatically comes to you. And I want you to know that we meticulously craft every one of our episodes to have impactful strategies, stories, expert insights that are designed to help you grow your profits, increase the value of your business, and yes, even optimize your post-exit life and your life right now, whatever you want that to look like. And every time you subscribe and a fellow entrepreneur subscribe, it's a testament to how together, yes, we are changing the social fabric of society. One business owner at a time, one liquidity event at a time. So don't let the momentum stop here. Subscribe now on your favorite podcast channel. You'll never miss an episode. You'll be the first to hear from the top industry leaders, the innovators, the disruptors that are really changing and shaping the business world. And maybe you're commuting, maybe you're at the gym, maybe you're taking a well-deserved break that we spoke all about on this episode. The Deep Wealth Podcast, it's your reliable source for the next big idea that could literally revolutionize your business. So once again, please hit that subscribe button, stay connected, inspired, and ahead of the curve. And again, your next big breakthrough moment, it might just be one episode away. Maybe it was even this episode. So all that said, thank you so much for listening. And remember, your wealth isn't just about the money in the bank. It's about the depth of your journey and the impact that you're creating. So let's continue this journey together. And from the bottom of my heart, thank you so much for listening to this episode. And as we love to say here at Deep Wealth, may you continue to thrive and prosper while you remain healthy and safe. Thank you so much. God bless.